Hi, I'm Stephanie and I'm Director of the Insolvency Company.
And I'm Gareth. I'm an insolvency practitioner at the Insolvency Company.
And we're also husband and wife. Gareth and I set up the Insolvency Company to be a friendly face in the world of insolvency, in the hope that if your business is facing a difficult financial future, you'd come to us at an early stage and potentially we could help you to avoid closure.
Today we're going to cover some FAQs and talk a bit more about the world of insolvency.
What is an MVL?
So MVL stands for Members Voluntary Liquidation, and this is a positive liquidation because it's a solvent liquidation. So at the end, once all creditors have been paid, there is a pot of cash left over to be distributed to the shareholders, the members of the company. And the liquidator in an MVL, their main job is to realise those assets and to distribute those funds and then close the case.
Okay, so with an MVL, and you say it being solvent, so it's different to the other businesses you usually work with because it actually means that they have got the money to pay everyone that they owe. How much do they need to have to do an MVL?
So if you have more than £25,000 after paying everyone off, including taxes, then it is often more beneficial to do an MVL than it is to simply close the company. And that's because the funds that are distributed are treated as capital rather than income. So you're taxed in a different way.
Okay. So is it something that entrepreneurs set out to do an MVL? So they're planning on, setting up a business, and then when it's really successful, they plan to do an MVL at the end of it?
Well, there is something that used to be called entrepreneurs relief and now called business asset disposal relief, and it is designed to encourage entrepreneurs to set up and grow businesses and then sell them. So business owners will pay, if they qualify, they will pay a maximum of 10%.
Okay.
On the funds that they receive, which is far cheaper than if it was received via income or any other method.
And can anybody do an MVL, or do they have to come to an insolvency practitioner?
They have to do it through a licensed insolvency practitioner who can act as liquidator.
Thank you. Could you tell me more about the process of an MVL, how that works?
Yeah, of course. An MVL is actually a really easy process to place a company into members voluntary liquidation. Most of the work is actually done by your accountant because that's really the majority of information we need. So you would have a conversation with us, we would explain the process, you'd usually include your accountant in those conversations, we'd be able to work out if it is beneficial for you and that you would save tax and that you do qualify for an MVL to make sure that everything is correct. Once you decide to go ahead, it can be done in a matter of days.
Oh, so quite quick.
Very quick.
And then with an MVL, can I then set up another business? So I've had a successful business and I do an MVL. Can I then set up another business?
Yeah, there is absolutely no restriction. And it's the same in most liquidations. You can set up multiple businesses, you can run multiple businesses. It doesn't have any impact on other businesses that you run.
Can you set up another business in the same industry if you've just done an MVL?
You can. In terms of qualifying for the most tax efficient reliefs, which is business asset disposal relief, if you do a members voluntary liquidation and the reason to do that was to save tax, and then you set up an identical company in the next 2 years, you may not qualify for that tax saving. So there has to be a reason other than tax savings to close the business. It may be that there are two shareholders in this business and you're going to go your separate ways and you set up on your own in the next business. As long as there's another reason, then it's not a problem. So
if this was something that I was thinking of for my business, so, planning for retirement, say, or like you say, starting a different business venture, would you advise I come and speak to you or just speak to my accountant?
Definitely come and speak to us. We'd be able to explain how the process works. We'd be able to give you an indication if it's likely that you qualify. We're not tax advisors, so we'd always say seek your tax advice regarding what kind of tax you would be paying, which you should do anyway. But we can give you a strong indication and we can definitely rule it out if you do not qualify.
Okay, thank you. Could you tell me about a CVL? What does CVL stand for?
Yeah, so CVL stands for Creditors Voluntary Liquidation. And it's voluntary because the directors are the ones that are proposing that the company goes into liquidation, so they're choosing to. They're not being forced to by one of their creditors. They're making the decision themselves to do this.
And what's the process? Like if I was to come to you, you give me the advice and you say, I think this is the best route for you. I've made the decision. Yep, that's what we're doing. Then what happens?
Yeah. So there's a legal process to follow. As directors, you've got to have a board meeting. And then there has also got to be a shareholders meeting where the shareholders agree to place the company into liquidation. And alongside that, you've got to notify creditors. So it sounds very complicated, but really we do all of that. We prepare all of the paperwork. Your main role as a director is to provide information so that we can prepare that paperwork and we can get everything ready to place the company into liquidation.
Do all of the shareholders have to agree?
No. So 75% of voting shareholders have to agree. Usually we deal with a lot of owner-managed businesses, so it might be 1 or 2 shareholders. You've got to have 75% to agree to be able to place it into liquidation.
How long does it take for a CVL?
To place a company into liquidation, there is a fixed notice period that we have to give to creditors of 7 days. So it can't be faster than 7 days. But in addition to that, the time before that, it's as long as it takes the director to provide the paperwork. Right. Sometimes it can take them a couple of days. In a more complex business, it might take them a week, 2 weeks. So really, it's as quick as the director wants to make it happen.
And can the accountant help with that process?
Certainly, yes. So the accountant will have a lot of the information that we need to prepare the paperwork, and if they're supportive and able to provide that quickly, then we can move things forward faster. What
if I, as the business owner, owe my accountant money? Does the accountant still have to help? Will they help? How does that work?
Very much depends on the accountant. No, they don't have to provide information in that pre-appointment stage. We will typically work with the director and work with what information they can provide. So if there's something they can't provide, we'll work around it to make things happen.
And is there anything that can be paid to the accountant for their assistance or their help?
Yes, if they're going to provide work to assist in the preparation of the paperwork, then yes, they can be paid. If there are funds available to pay them and the accountant agrees, then that works.
So you said there that pre-appointment, so before the company is placed into liquidation, the accountant doesn't have to, but does that mean you're implying that after, once, what happens then?
Yeah, so once a company's in liquidation, anyone that has information relating to that company has to provide that to the liquidator.
So there's like a legal duty?
There's a legal duty to provide information to the liquidator. So accountants, we often write to them once the company's in liquidation to ask for certain information, and they will usually provide it.
So it would actually be better for them to provide it in advance so everyone sort of knows where they stand, so when you're preparing all the paperwork and everything.
Yes, they'll provide it anyway. Yeah.
In everyone's best interest. Thank you. Can a CVL be reversed?
No. Once a company's in creditors' voluntary liquidation, it doesn't get reversed. The next step, once the liquidation is fully completed, is that the company gets struck off and dissolved. And that is the end of the company.
Okay. Do the same rules apply, or how does it work for me as a sole trader?
So if you're a sole trader, or self-employed as some people say, then obviously liquidation is for limited companies, so it doesn't apply to you. You do have options as a sole trader. You have bankruptcy, which is the option of last resort.
So it's more like the personal insolvency?
Personal insolvency, yes.
Okay.
And for sole traders, self-employed people, the other option that they consider is an IVA, an individual voluntary arrangement. The reason that someone would do an IVA is because they may have assets to protect. They may have a home with equity and they don't want to have to lose their home. In bankruptcy, there's a chance that would happen. So an IVA is often more appealing. And an IVA is a compromise between you and your creditors.
And you explained before that your complex IVAs is sort of a specialist area for you. You mentioned something about a full and final IVA. What's a full and final IVA?
Yep. A full and final IVA, also known as a lump sum IVA, it's just a way of offering creditors a lump sum to settle the debts.
So if I'm a sole trader, I need to close my business, I'm in debt, but I have got some money, I just haven't got enough maybe to pay everybody off. Could I come to you in terms of to organise a full and final or a lump sum IVA?
Yes, and the amount that you offer is very much dependent on your individual circumstances and where the funds are coming from. But yeah, creditors will often accept a reduced sum because they know that they would get more than they would in bankruptcy.
And if, as a sole trader, and I haven't got the money to pay everyone, but say if I was to borrow that from a friend or a family member, is that something that you can do?
Yes, and they are often the most likely to be accepted because the funds are coming from a source that they would not have access to in bankruptcy. So it's better for the creditor. in that situation.
So again, if I'm a sole trader and I'm struggling and I don't quite know what to do, I should still speak to an insolvency practitioner, or?
Definitely, should always get that advice just to find out what the options are. Some people an IVA is not appropriate for. It's better for them to go bankrupt or to do something called a debt relief order, which is like a lighter version of bankruptcy. And you don't need to pay anybody to do that service, you can do it yourself. But you certainly want the advice first to make sure that that's the right course of action for you.
So by speaking to an insolvency practitioner, they know they're getting the most qualified advice, but actually then they can maybe go and take, Yeah,
if I speak to somebody and it's a complex situation and an IVA is appropriate, I will recommend that. But if not, I'll refer them to either a debt charity or another specialist that can help them.
Okay, thank you. If you have any questions, if your business is in difficulties, or you'd just like to know a bit more about insolvency, send your questions to the Insolvency Co.